Good afternoon and welcome to this video webinar. This afternoon we're going to be looking at the proposed increase in VAT rate in Saudi Arabia. I'd like to say first up, thank you all for attending. We've already got a lot of people on the line. We wanted to do this webinar as quickly as possible because this is a very important point in time. It's a very important change, but we appreciate it's the last couple of days of Ramadan, so we really appreciate you taking the time to join us this afternoon. I would like also to introduce my colleagues online who will be sharing the presentation today. Firstly, we have Ahmed Ali, who is in our Riyadh office, and we've also got a panel from around the Gulf who will be there to answer questions if there's anything that you want to raise as to the implications outside of Saudi Arabia. We firstly have Ashish Atavali, who will be covering Oman and Bahrain. We have Rami Aladrami, who's in Kuwait, and Essam Mohammed, who's in Qatar. And also the final part of the team that you can't see at the moment is Manish, who's in Kuwait, who will be the moderator, and he'll handle the questions later on this afternoon. When it comes to questions, I just wanted to say the presentation will be primarily in English, but if you want to raise questions or need anything clarified in Arabic, we have obviously a number of Arabic speakers on the panel, so we're very happy to take questions in Arabic. Right, thank you very much. Let's get into the presentation. They're all our names and the contact details, by the way, at the end of the slides, and I think the slides will be available to everybody after the webinar. You probably, I'm sure, know BDO. We're a global practice. We have coverage throughout the Middle East and throughout the Gulf. The agenda today, we're going to focus first of all on the transitional rules. As many of you know, the transitional rules were released in the early hours yesterday morning. So we now know from Gazat how some of these rules are to be applied. That's the priority, and that's what we're going to be looking at mainly. However, we will also look at the implications for regional businesses. There's lots of businesses that trade in and out of Saudi Arabia that will be affected. So we'll largely look at the implications in Saudi Arabia, but we'll look wider as well. And we'll look at what businesses should be doing now before eventually we get on to the question and answer session. Right, we can have the next slide, please. And thank you very much. Right, the basics. The VAT rate will rise from 5% to 15% on the 1st of July. That's the announcement, and there are no exceptions. So everything that is subject to 5% now will become subject to 15%. It's a big increase, but it is worth saying that actually, if you look around the world, 15% is a very typical rate for VAT. The 5% rate that VAT was introduced at is actually a very low rate. Most countries around the world, the rates of VAT tend to be between 15 and 20%. Now, the important news was the guidance that was issued early yesterday morning, and that's what we're going to focus on today. Although the guidance has come out, as yet, there is no implementing law or change to the regulations to confirm how the rate will be changed. There's also no change to the GCC agreement at this stage, but we are expecting legislation in due course. Now, at the moment, there's been no response from any of the other countries or no indication that the other countries, I believe, are going to change their rates in the same way. We have VAT and other rates around the GCC. UAE has said definitely at the moment there is going to be no increase in VAT. I'll just turn to the panel very quickly. Ashish, any indication of any rate increase in Bahrain or any movement from Oman on implementing VAT?
Yeah, Brian, thanks. So as far as Bahrain goes, there are a couple of announcements from the ministers per se, but all of those have not been formalized by the regulator in Bahrain, which is the NBR. And as far as Oman goes, we don't have a VAT in Oman yet. And as we are under a temporary lockdown, there is no announcement per se from the tax authority in Oman that whether the VAT will be implemented soon or no. The last announcement we have in Oman is that VAT will come into play in Oman somewhere in 2021.
Thank you, Ashish. And Rami, any official reaction from Kuwait?
No, Brian. The Ministry of Finance has been closed since March 12th. They are expected to return to work on 31st of May. So since the decision of the Saudi authorities, there has been no official announcement about any indication of implementing VAT in Kuwait soon or at what rate. So we will wait and see after 31st of May if Kuwait will take a position.
Okay, and finally, Assam, no VAT in Kuwait, in Qatar at the moment. Any announcements?
No official announcements till now, and we don't expect in soon future we will have something.
Okay, thank you very much. Thank you very much. Okay, if we can have the next slide now, and then let's start to look at the transitional rules that have been announced. There is effectively a transitional period from the 11th of May to the 30th of June. So there are special rules for invoices and supplies made during that time. There are special rules for contracts with government bodies. There are rules for contracts between VAT registered entities, and there are also some special rules around invoices that are issued before the VAT rate comes in on the 1st of July. So we'll take each of those things in turn, starting with the contracts with governmental bodies. So if we can have the next slide, please. Now, these rules are quite similar to the rules that were introduced when VAT was introduced in 2018 for basically old contracts, contracts that were in place before anybody expected that the VAT rate was going to change. This first set of rules are specifically for government bodies, contracts with government bodies. Government bodies can't claim back VAT generally, and therefore VAT is a cost, and therefore this is to protect those government bodies to a certain extent. The rule is that if the contract was signed before the 11th of May, which was the date at which the announcement was made, then the services or goods will continue to be 5%, not 15%, until either the contract expires, the contract is renewed, or 30th of June 2021. So whichever of those things happens first brings this to an end. And so that's contracts before 11th of May. Contracts that are between the 11th of May and 30th of June inclusive. So the period before the VAT rate comes in, the new VAT rate comes in, but during the period when we know it is coming in, quite simply, if the supply takes place before the 1st of July, it will be 5%, but there is no relief after that. Any supplies after 30th of June will be subject to 15%. Ahmed, anything you want to add at that point?
I just wanted that, as you mentioned, that the 11th of May, okay, is the date that the Ministry of Finance announced that there will be an increase from in the VAT rate from 5 to 15%. That's why that you choose this date in order to as transition the date for the starting the transition period.
Thank you. Yeah. Okay, so if we move on to the next, this is an example, sorry, of how this will work in practice. So as an example, this is a contract to supply computers to a government agency. And in this example, so the contract is signed on the 15th of January 2020. Final delivery will be August 2020. And now this falls into these transitional rules because the contract was dated before the 11th of May and the delivery is before 30th of June 2021. So despite the fact that the delivery is after the rate change, it will be at 5%. So this is an example of a contract that is protected by these new rules.
Yes.
Okay, so contracts between VAT registered entities. This in some ways is similar to the relief for government contracts with one important difference. Okay, there are special rules for contracts signed before the 11th of May, but only where the customer is entitled to claim input tax in full. So this is between two fully taxable VAT registered customer entities. If you have a contract like that, then the same as with the government contracts, the service or goods will be subject to VAT at 5% until the earlier of the expiry of the contract, the renewal of the contract, or 30th of June 2021. So after that, it all becomes subject to VAT at 15%. But it is important, this only applies if the customer can claim back all of their VAT. So this might apply, you know, on construction contracts, but if you had a contract with a bank, say banks can't normally claim all of their VAT, this relief probably wouldn't apply. Ahmed, would you like to add anything to this?
So as per the transition rules here, that the customer is entitled to claim input tax in full. How, as I'm a supplier, okay, to a customer or to another company, okay, how I'm going to check this point, and what kind of evidence I'm going to have in order to see that if the transition rules applies or not?
Yeah, I think that's going to be important, and essentially the supplier will need to get something in writing, a certificate of some sort from the customer that says, yes, I'm entitled to claim back the VAT in full on this.
So actually that we are going to put the same condition which was in the transition rules in 2018.
Yes, at that time, everybody was getting certificates from each other, and it will be important to do that, because if you haven't got that proof, then you know, there's a question as to whether or not you fall into the rules. So definitely all businesses should get that proof.
So even if it is required, we need to have such a certificate. This is what we mean.
Yes, definitely. Okay, anything else you want to pick up?
No, that's it for this.
Okay. One thing I will mention on the expiry of the contract or renewal of contract, with the transitional rules when VAT came in, it was important if a contract is changed or renegotiated, that may be considered to be the expiry of the existing contract. So if you have a contract that is covered by these rules and you make changes to it, it may invalidate the relief. So I think that's very important to remember when you're looking at this sort of thing.
This what you mean, that it will somehow cancel the 5%, and now we need to apply from the date of the change of the amendment the 15%. Since it, of course, after 1st of July 2020.
Yes, absolutely.
So, okay, if for instance that I changed the contract from 1st of September 2020. So the change also, the 15% will apply from 1st of September 2020, from the date of the change.
Exactly right. Yeah, absolutely. So let's have we've got an example, I think, on the next slide of these particular rules. These are two companies, VAT registered, and the buyer can claim back his input tax in full. And it's for a contract where delivery will be made over 2 years. Now, in this case, what we have is deliveries that are made before 30th of June 2021 will be at 5%. They fall into the relief. But as soon as we move beyond that date into 2022, the VAT rate becomes 15%. So as soon as we get to 1st of July 2021, the VAT rate changes to 15%. So the relief is only for a limited time. And coming back to this point earlier, that only applies if the supplier gets written confirmation from his customer.
So that from after June 21, we need to have an additional debit note or additional invoice in order to add the new tax or to increase the VAT from 5 to 15%?
Yeah, I mean, as soon as those suppliers start to take place after that date, invoices will need to be raised at 15%. Okay, so if we go on. Now, those were rules for contracts, general rules for contracts. There are also additional rules for invoices. And this is on the assumption, I guess, that in many cases, particularly where you're dealing with unregistered people, private individuals, there won't be a specific contract, but you're raising invoices for supplies. And again, that date of the 11th of May 2020 is the all-important date. If you issued an invoice before 11th of May 2020 and the supply takes place before 30th of June 2021, it will be subject to VAT at 5%. So again, it's preserving the 5% if you raised your invoice before you knew that the rate was going to change. But bear in mind, that is only for a limited period. So after 30th of June 2021, the rate becomes 15%. Okay, if we, I think we've got the next slide, we have an example of this, and very simple. This is an insurance policy, typical supply that might fall into this category, where we have a policy that runs from the 1st of January 2020 to 31st December 2020, normal 1-year policy. The policy issued on the 1st of January and the invoice would have gone out at the same time. Now that was before we knew that the VAT rate was going to change, so the invoice would have been issued at 5%, and as a result, there is no additional VAT to be charged. So this falls within this transitional rule. Next rule for invoices. This is for the invoices raised after 11th of May, but up until 1st of July, the period that we're in at the moment. If any part of the supply is delivered before the rate change, then it's a 5%. But if any part is delivered after the 30th of June, it becomes 15%. So it's effectively an apportionment of a supply if it spans that rate. And we've got an example here. So we've got a stationery company. It issued its invoice on the 15th of May, after, of course, the announcement had been made. Delivery, though, won't take place until 1st of August, but because the invoice was raised after the 11th of May, this will be subject to VAT at 15%. So what will happen is that when the delivery takes place, that will create a date of supply, and it'll be necessary to raise an invoice, I guess, at that time and account for the VAT.
Yes.
Any further comments on that, Ahmed? Does that?
Actually, there is a couple of points here. For example, for the insurance company, that if the policy was issued from after 1st of May, after 11th of May till 30 of June, so part of this and will extend, the service will continue, or the policy will cover also after 1st of July, we need to somehow calculate the VAT, okay, from 1st of July based on the 15%, which is the amount will be covered after 1st of July. And also, all the insurance companies should make sure or discuss with Saudi Monetary Fund, Arabian Monetary Fund, that how we are going to collect such VAT, since we already issued the policy and we already collected the money from the customer, how we are going to collect such money, because that a lot of companies has been hit by negative cash flow because that they paid the VAT in 2018 for the policies covered in 2018, but they would not be able to collect the VAT from customers, especially the individual customers.
Yeah, indeed, and there are potentially similar issues here, aren't there, for those insurance companies?
Yes. But the amount is limited. It's not like 2018.
Yes, it is at least a fairly small window in this case.
Also, a couple of issues that, for example, in the guidelines, in the example mentioned that the invoice issued before 11th of May, the amount, the invoice is issued with the full amount. So if we need to make sure that I'll discuss with Gazette, if the invoice was not issued with the full amount, will the same transitional rule will apply or not? We need to understand this in order to be clear about the situation.
Yeah, that's a good point. There are still some questions to ask Gazette about how some of these rules will apply.
Yes.
Okay, thank you. That's it for the transitional rules now. So what we want to do is just cover very briefly some of the general impacts that the new rules will have on businesses. There is a lot for businesses to think about with this new rate change coming up. There will be an impact, of course, on prices and demand for some products, particularly if these are products that are non-essentials. And when VAT first came in 2018, we saw that there was a spike in demand for certain products where people tried to beat the increase of VAT. I have a question, well, will people try to beat the rate change as well, bring forward purchases of things like cars, consumer durables? It's more difficult at the moment, of course, because of coronavirus and people not going out so much, but it is possible that there will be some sort of spike in demand. Businesses are going to need to consider pricing decisions around the rise. You don't have to raise your prices by 10%, the same as the VAT in most cases. It is up to the seller to decide what their price is, and there will be some businesses that in order to maintain demand or in order to gain market share might keep their prices down in order to keep sales up. That's possible. This is something that affects both Saudi businesses and businesses that are selling into Saudi Arabia through distributors. Because obviously if demand and prices is affected in Saudi Arabia, if you are a business outside of KSA and you're selling into the kingdom, then it will affect your sales, your exports to Saudi Arabia. If we could go to the next slide. There are a number of things that businesses need to get done very quickly to make sure that the ERP system is up to date and all of the systems can cope with the new VAT rate, and indeed that it can cope for a while with dual rates, because for a while invoices will be received both with 5% and 15%. And as we've seen, because of the transitional rules, some businesses will be issuing invoices to some customers at 5% and some customers at 15%. So the ERP system needs to cope with this, and it needs to do things like be able to cope with adjustments, credit notes. If you're running an online platform, excuse me, then it is important that, again, the platform can cope with the changeover of rates, and especially point of sale systems. If restaurants and retailers are actually open over the changeover period, they need to be able to very quickly switch from 5% to 15%. Anything you want to add on that particularly, Ahmed?
Actually, that so some people say that we are going to change. Actually, we are going to change the 5 to 15 after the issuance of the guidelines. No, I think that you need to keep both the rates in your ERP system for both purchases and also your sales, because your purchases you are going to receive invoices with 5 and 15, and also in case the company didn't recover or deduct input VAT invoices for example 1 year or 5 months or 2 months like this, it has the right to recover these invoices up to 5 years. So I can recover it, and the return, okay, should give me the option to recover such invoices, because the law provides provide me such an option. Also for the sales that I have now, invoices can be issued with 5%. I have invoices from 1st of July which can be issued by 15%, and also that if I can issue credit notes after one customer requested me for a discount, I can issue him a credit note for a supply that has been done before 1st of July 2020. So all the rates post 15 and 5 will be still applicable.
Yeah, I think that's very, very important.
And also that we need to somehow segregate between this in the accounts in order to have more clear and can be traced easily. And this is what we advise.
Absolutely, absolutely. Okay, thank you. Manish, can we have the next slide? Thank you. Again, I'll get Ahmed just to say a word or two about the VAT returns. I think that there will need to be changes made to the way the VAT return operates. Ahmed, if you could just make a comment there.
As you can see here that we have the local sales after applying the new rates, we will have that new categories will be added to this return. For example, local sales subject to, or domestic sales subject to 5%, and we have also domestic sales subject to 15%. Also for the purchases part, we will have both rates. We assume that Gazette will work on the portal and make such adjustment, that we have domestic sales subject to 5% and also domestic sales subject to 15%. But for the customs, we don't know that because the customs that for starting from 1st of July, the custom authority will, for any shipment comes after 1st of July, it will automatically, I think in my opinion, will automatically trigger the 15% rate. So we need to have somehow be careful that if you didn't recover all your shipments before 1st of July, especially for the coronavirus crisis also, which delays a lot of issues and a lot of documentation.
Yeah, thank you, Ahmed. I think there will be quite a few practical difficulties to deal with in getting the VAT returns correct. Okay, thank you. If we could have the next slide. I think, to be honest, Ahmed has probably covered most of the issues on this slide to do with the VAT return and also the reporting that needs to be done. Is there anything else you want to add on that, Ahmed?
Actually, that all of the people, most of the people are familiar with filing with the return. As you know, that we fill the purchases or the sales amount, and return the template itself of the return will calculate the VAT. So what we can do, we can only do adjustment in the sales or the purchases. We cannot do the adjustments to the VAT due or the VAT amount itself, because this is being done by the template itself. But we don't know what kind of adjustments and amendments will be done in the return for after 1st of July 2020.
No, thank you. Okay, great. Thank you. If we move on. Just very quickly, it's worth just mentioning there are some obvious cash flow impacts that will come from the increase in VAT. Effectively, the amount of VAT that will be paid over to Gazat at the end of the VAT period will be far higher. The amount of VAT payable at importation will be much higher. The problem will be made worse by slow payers and bad debts. And this has always been a problem, but if it's a problem at 5%, it's going to be a much bigger problem at 15%. I think businesses are going to have to start considering things like making sure they claim any refunds earlier, quicker than they have in the past, and making sure that they claim input tax quickly. Sometimes we see businesses, they maybe claim the input tax a month late, some of it, or even later than that. The quicker that you can get the input tax claimed, the quicker or the lower the overall payment to Gazat will be. So I think there's a lot that businesses can do to help themselves on the cash flow issues that there will be there. On to the next slide. Just want to look at, just very briefly, at some of the impacts for businesses that are trading with Saudi Arabia. If you are a business that is exporting goods to Saudi Arabia, the normal thing is that the importer will pay the VAT at the time of import. That creates a cash flow issue for the importer. Normally they can claim back the VAT, but if you're exporting, say, to a government department, then there may be an issue because the government department won't be able to claim back VAT. And as we've talked about earlier, if you are selling goods that are consumer goods where the demand may be affected, this is something that may affect your exports. It's something that businesses probably need to be talking to their distributors in Saudi Arabia now and addressing the issue up front. We can have a look at the next slide. This is the opposite, people buying goods from Saudi Arabia. Now, the first thing to say is if you're buying goods from Saudi Arabia, there should be absolutely no change at all. The new increased rate doesn't affect any of the zero rates. So goods exported are zero rated. So if the goods are exported to you at the moment at the zero rate, they will be zero rated going forward as well. So absolutely no change there. I think it's worth just saying a word or two about services, though. There is a zero rate for exporting of services under Article 33 of the implementing regulations. Originally, that was very restrictive, and the rules were changed in July 2019 to make them less restrictive. But the point is that some services cannot be zero rated when they are charged from Saudi Arabia. And in the past, we have seen some businesses that are quite happy to accept a 5% VAT charge that they know they can't claim back. 15% is different. Suddenly that is much more serious. And I think a lot of businesses will need to start looking at, is there any possibility that they could use the relief in Article 33 to get their service zero rated? Maybe this is something that businesses will need to talk to Gazat about. This is a problem particularly where businesses, international groups, maybe have a subsidiary that makes a service charge out of the country, and in the past it's been unable to charge that without VAT. Head office may be accepted 5%, maybe 15% is an issue. Ahmed, do you want to say something about that? Because we know services can be a problem exported from Saudi Arabia.
Actually, that a lot of companies before July 2019, as you mentioned, the rule for exportation was quite restrictive. Any benefits in Saudi Arabia will trigger that, will somehow trigger the 5% VAT, and as per the rules, if you have any benefits in Saudi Arabia, in this case, that is, the service will be subject to 5%. But now, since after the amendments of the regulation, as you mentioned, in July 2019, somehow more relaxed. But however, we advise clients that in order, before you go to apply the zero rate, you gather your documents, put a ruling, just to request a ruling from Gazette, put all your documents, put all your invoices and supporting, and provide the documents to Gazette in order to, Gazette is the general authority for the cut and tax, in order to somehow get a confirmation or somehow get their opinion about such transaction between the head office or affiliate or any offshore company. In order to somehow, this will smooth the things and will facilitate the dealing with Gazette during two audits or assessment. Because if you have such a ruling which confirm that we see your documents and we believe that it is somehow can be considered as export of exported service, this somehow will make things easy for you when you are going to apply the zero rate in your return.
Right, thank you, thank you.
Because,
okay, sorry, did you want to say something else, Ahmed?
Because that when you are going to file the returns with some things that automatically will trigger questions from Gazette, that when once you are going to apply zero rate or exempted income, this will automatically trigger Gazette to ask you question and get you in assessments to ask you why you have done this and why you applied the zero rate. So better from the beginning to be ready.
Yes, absolutely, absolutely. Okay, thank you. And if we can have what I think is the final slide, just to summarise what we've said out, what businesses should be getting ready for now. I think study those transitional rules, make sure that you're fully aware of how those transitional rules will work. Check your contracts to make sure that your contracts allow you to charge VAT at the higher rate. We haven't mentioned this before in the seminar, but it is important just to say you need to make sure that you can charge 15%. The contract allows for that. So if you have large ongoing contracts, just check that there is no problem there. Because VAT was introduced fairly recently, I think most contracts have good VAT clauses, but do check them. Update the IT systems, as we mentioned before, and consider the impact on prices and demand, cash flow, and that sort of thing. I think for regional businesses, if you're exporting to Saudi Arabia, consider whether there is going to be an impact on your business. And I think for businesses that are buying from Saudi Arabia, just make sure that to the greatest possible extent, services can be zero rated. Any final comments, Ahmed?
Actually, that I have one comment, but I don't know if I am too much pessimistic about it. But as you, that penalties in Saudi Arabia VAT law was quite severe. Okay, we are talking here about 5% delay penalty each month, and also if there is a error in the return, 50% of the VAT due difference. This and the VAT rate was 5%. So we need to think very carefully and to be very cautious now from now on, because 5% at was the penalties was severe. So after applying the 15%, so now we are going to multiply. It will be multiplied by 2, triple the normal VAT rate. So the penalties can be quite substantial now to any business. So we need to be very careful. And since the coronavirus crisis, Gazette has announced a very incentive that you can amend the return. Okay, any return you can amend it, and without applying any penalty on delay penalty or even VAT return error, but you have to pay the amounts before end of June 2020. And this is very, very good approach and good gesture from Gazette.
Okay, yeah, thank you very much. I think the impact on penalties is very, very important. Okay, now I think we're almost at the questions session, so I think Manisha's probably got plenty of questions. Just before we move on, just the rest of the panel, is there anything at all you want to add to what we've said there? If there is, if you want to come on screen and just say a couple of words. Rami.
Yeah. So yeah, from a regional perspective, and in particular to countries that share land border with Saudi Arabia. In the past, we have seen a number of instances where the exports from Saudi Arabia to a neighboring country that share land of Saudi Arabia, so that is export by land, the Saudi supplier has levied VAT on the transaction, and the GCC customer has accepted that VAT cost. So with the increase in VAT rate, there will be a bigger hit by the GCC buyer. So we may see price negotiation as a result of that. And another point to add is because of the increase in the VAT rate, tourists and some non-resident businesses, as a reminder, are entitled to claim VAT refund from the Saudi authorities. So with a bigger VAT cost, we may see probably some more VAT refund requests going through in the next period. That's it from my end. Just for the sake of time, I'll pass on to Ashish. He may have additional points.
Thanks, Rami. I would like to point out one, a concern, I would say, as Brian and Ali were saying that, services which are provided outside of Saudi Arabia, the zero rating on that is a little bit strict, has been relaxed a bit, but it is still strict, and it is subject to the documentation from an Oman side. So if we have a service provider from Saudi Arabia providing services into Oman, or as mentioned in the slide, if there are cross charges, all of this is going to be liable to a withholding tax in Oman, as there is no double taxation avoidance agreement or treaty between Saudi Arabia and Oman as of today. This will lead to additional costs, as from a commercial standpoint, the service providers out of Saudi Arabia may not want to take the commercial hit of the withholding tax in Oman, as may that become a cost. So there is a concept where the charges are grossed up. So we are now speaking about 105 vis-a-vis 115 for the purpose of deduction of the withholding tax in Oman. So now the deduction may be done on 115 in place of 105 before. And all of this, again, as there is no DTAA between KSA and Oman, this will become a cost in the transaction, just pushing up the mere cost that we have when we are dealing within the GCC region. And similar is the story with Bahrain. While Bahrain may not have a withholding tax or a corporate tax, there is a VAT, and if there is a VAT which has to be paid under a reverse charge, being that the taxpayer in Bahrain is an exempted one, this is going to push up the cost of the transaction. So maybe I may, out of Oman, may prefer a jurisdiction which is not going to charge me a 15% VAT. Having said that, a 15% VAT for the rest of the world is not a shock. There are a lot of jurisdictions which levy VAT in the range of 20 to 25%. So that's from Oman and Bahrain side. Over to my colleague Isam in Qatar.
I think from Qatar side, no effect on this because of current situation. So nothing from my side.
Okay, thank you, Assam. Excellent, thank you. Manish, do we have some questions in that case?
Yes, we do. Thank you very much, panelists, for this insightful presentation. We will try and take a few questions. We have about 15 minutes left for the webinar to end. We'll try and take a few live questions first, and then I will try and moderate questions that we've received through our question box.
Okay, thank you.
Vijay Kant Upadhyay, if you're online, you're going to be unmuted now and you can ask your question. Okay, I think he's dropped out. Mohammed Al Rashdan, I'm going to unmute you now for your question.
Thank you very much. Good afternoon, gentlemen and ladies and gentlemen, and thank you very much for this insightful webinar. In quick words, just wanted to know if you can just cover the topic in a wider region perspective, like what...
Sorry, we lost you, Mohammed.
Hello?
Yeah.
So in few words, what would be the impact on the regional perspective in UAE and Bahrain in terms of having such a future decisions? I believe that some news coming from the Ministry of Finance in UAE said that there will be no changes in the near future on the rate, but like looking on it from the regional perspective, what would be the implications from your point of view as an expert body here? Another question regarding the insurance contracts. So you say that services provided after 1st of July would be subject to the new rate in KSA. So you covered it from the business to business perspective. What about the B2C, business to consumer perspective? How our companies can guarantee their rights in collecting the remaining 10% from the consumers? So you know that it's already being dealt in a prepaid basis. So all the VAT was collected on a 5% rate at the beginning of the year. So what would be the treatment of the remaining 10%, which should be applied on the service delivered after 1st of July?
Yes.
Okay, thank you, Mohammed. To answer the first part, the implications for the region, as you say, UAE has said that for the moment there is absolutely no intention to increase the VAT rate, and equally at the start we heard from the other guys that Bahrain is not intending to increase the rate, or there's been no announcement at the moment, and there has been no announcement in the other countries about introduction of VAT any earlier than normal. But I think what we have seen as a result of this change is that things happen very, very quickly. None of us would have predicted a tripling in the rate overnight as happened here. It took us all by surprise. So I think it does prove that things can change very quickly. These are unprecedented times. Certainly, we've heard no firm plans from any of the other countries to make drastic changes at the moment. But as I say, things can change very quickly.
And sorry, regarding, just to close the topic, regarding the GCC treaty for implementation of taxes, I believe the tax rates should be unified between all implementing states. So how can this be like treated by the countries? I believe this will go live like sooner or later, up until the end of the 2020 year. With actually, like that was like the initial plan by the implementing states.
Yes,
that's a very good point.
Yeah, Ahmed, do you want to just comment on that?
Actually, this is a very good point. But however, that actually we came to know that the GCC countries now are in a process in order to negotiate, okay, on putting, changing, revising the GCC Unified VAT Agreement and putting basic rate, a higher, lower ceiling and upper ceiling for the rates.
Mm-hmm. Any particular numbers for that? Any?
No. I hope so, and it should be
I
announced.
wish we knew, but I think there is no doubt that the GCC agreement would need amending, and that may happen in due course. And as Ahmed said, perhaps a lower and a higher rate, which is similar to the approach that's taken in Europe. That might be a way of doing it.
What we mean that
Thank
we are
you.
going to
Sorry, thank you, Mohammed, for your question. We have a lot of more questions coming in, so I'll have to give somebody else an opportunity. Thank you very much. If you have any more questions, you can feel free to email the team, and we will get back to you. Thank you.
Sure. Thank you very much.
Thanks, Mohammed.
We have a few questions from Mr. Badi Uz Zaman Qureshi. I'm unmuting you for your opportunity to ask questions, please. Hello, Mr. Badi Uz Zaman Qureshi. Okay, we'll move to Mr. John Brito for the next question. John, I'm unmuting you.
Yeah, I just asked a question. It's a simple question, but I would like to have that clarification. Basically, VAT is for the local sales. I'm from a chemical manufacturing organization located in Saudi Arabia. Our 80% of the business is, of course, it's export, and so basically VAT is for the local sales. And with this increase of VAT, what is the impact for the export to GCC and the other countries?
Okay, thank you for the question. Yeah, it's very important to say exports won't be affected. So exports will continue to be zero rated.
Okay.
You're correct that the VAT is chargeable essentially on local sales within Saudi Arabia, by and large. Now, there are some impacts for you nonetheless. It does mean that you will have to, you said 80% is exported, so that 20% that is sold within Saudi Arabia will be subject to the higher rate. There will also be an effect on your costs.
Yes,
because your suppliers will be charging you at 15%. So there is a cash flow impact when you're paying large bills. You're effectively paying an extra 10% to the supplier, and it means that where you're claiming back VAT from Gazat, the amounts will be higher. So it's important that they're claimed as quickly as possible. So there is an effect on your business. It's not as major as some, but there is an effect. Anything you want to add, Ahmed?
Yeah, and just one small clarification. And also, we import the raw material predominantly from overseas. So the huge amount we invested on the raw material which comes from overseas, and is that also obviously VAT payable, right?
Actually, that when you are going to finalize the custom clearance, you are going to pay the custom for say, and also you are going to pay, starting from 1st of July, you are going to pay the 15%.
Okay, and just one small last question, that is GCC, there is no issue. GCC is also considered as export, even though by road transportations, right?
Yes, it is.
Currently,
yes, it is.
Currently, yes.
Thank you.
Okay.
Thank you, John. Thank you for your question. I will now read out some questions that we've received in the questions pane. I think importantly, we have one question from Frederick Maralit. Will the 15% VAT have to be applied on the transactions between Saudi and UAE if UAE does not change their VAT rate? Thanks.
No, at the moment, a little as we were talking about, there's no difference imports, exports. UAE is just treated as a separate country. So UAE will not need to change its rates, but there is clearly an imbalance between the rates now. So exports as before to UAE will be zero rated, and exports from UAE to Saudi Arabia will still be zero rated. So the two countries, they're separate, and they don't have to have the same rate, though the GCC agreement was largely based on the idea that the whole GCC would operate on the same rate.
But actually, there is one point here which might affect this situation. There is some kind of supply, like, for example, hotel, restaurants, conferences, this type of issues that, for example, I'm a UAE client and I'm going to have stay in a hotel in KSA. In this case, the 15% will apply. It will not be considered as an export.
Yes, indeed. So UAE businesses, if they're coming to Saudi Arabia, they will have a higher cost, and they can't claim that back through their normal VAT return.
Thanks, Brian and Ali. We have a question from the real estate sector. For a real estate company where delivery of units is after 31st of December 2021 and invoices have been issued prior to 11th of May 2020, what will be the VAT rate? If so, will we need to reissue invoices for the difference to our customers? This is a question from Mohammed Aziz.
We're talking here about commercial, right? Commercial rent.
Yes, I guess either commercial rent or actual sale of new real estate.
The question specifically pertains to sale of real estate.
Yeah, okay, so potentially real estate under construction that won't be delivered until after 1st of July 2020. Was that the position?
That's right. That's right.
Yeah,
that's right.
Yeah. Yes. When the delivery takes place, VAT will need to be charged at 15%, and therefore a new invoice will need to be raised at that time and VAT charged and accounted for. And of course, on something like real estate, this is a very significant issue.
Great, thanks, Brian. Maybe we have time for one more live question.
Yeah, let's do that.
Mr. Nazar Abdul Majid, I'm unmuting you. Hello, Mr. Nazar. Okay, we seem to have lost him. Ms. Sudha Rao, I'm unmuting you for your question, please.
Hello.
Hello.
Can you hear me?
Hello.
Yeah, first
Yes,
of all,
yes,
thank you,
Mr.
gentlemen. It was a wonderful, actually, summary of the changes that for the VAT. I just have one question. We are based out of Dubai, and we get some services that are rendered inside Saudi Arabia. And at this moment, we are unable to claim it from the Saudi government. So will that also attract now 15% from 5 to 15?
Yes, if you're incurring VAT at the moment at 5%, it will be 15%. And as you say, at the moment, it's very difficult to claim that from the Saudi government. There are provisions in the VAT law for refunds for overseas businesses, but not all of the procedures are in place at the moment, so it is difficult making those claims. But yes, and this is one of the important impacts for businesses outside of Saudi Arabia. If you are currently incurring VAT at 5% and it goes up to 15%, it is a very large sudden increase in cost.
Yeah, and just to that follow-up question, if those services were after 11th of May, but before 30th of June, and the invoices is also dated before 30th of June, will that attract 5% or 15%?
So if the invoices are dated before the 11th of May, they will be, the 5% will continue to 30th of June 2021. But if the invoices are after the 11th of May, then the service will immediately become 15% on 1st of July, anything after 1st of July, or on or after 1st of July.
Actually, we
Okay,
need to
so
consider also if this is a continuous service or not. For example, if it is marketing and promotion or what, we need to understand such an issue in order to see that what kind of if this is going to be starting from 1st of July 15, or if the invoice was applied issued before 11 of May can still apply the 5% or not.
okay. Okay, thank you. Thanks a lot, gentlemen.
Thank you
Mr.
very much
for your
indeed.
question. Brian, can we take one last question, please, and then I think we can end. This question is from Javier. Can you clarify the notion of delivery versus invoice date? In the construction business, if we deliver some works, that is work status accepted on the 28th of June, but related invoice was issued on the 2nd of July. Will this trigger a 5% or a 15% VAT rate?
I think with the notion of delivery in construction is quite difficult, but generally speaking, you need to have the work signed off by a professional to say yes, this work is completed, and if both parties are satisfied that it's completed, then that is fine. I think, to be honest, if you want to have work that is in progress treated as 5%, I would suggest the invoice is raised before 1st of July, and that you have it signed off by the surveyor as complete and signed off by the client as complete prior to 1st of July.
I would like to add that in construction, there is an agreement. You need to have a look about the agreement and also see the date. If the date is prior to 11th of May, you might check that the transitional rules might apply if your customer, if it is a government entity, or it's had the right to recover input VAT in full.
That's a very good point. With construction contracts, I suppose the first starting point is, does it fall underneath the rules for the transitional rules for contracts? You get down to the details around delivery of the service and the invoicing at a later date. So, but look at the contract first of all.
Yes.
Okay.
Thank you very much. And I think this is all the time that we have for questions. I will take one question though. Lot of people have asked if we will be emailing them the slides. Yes, we will be emailing you the slides between today and tomorrow. All the registrants will get a copy of all the slides that we've presented today. My apologies, we could not take all questions given the paucity of time, but thank you all very much for joining in, and we hope that you found this webinar timely and useful.
I would like to add that. Thank you. I would like to add that we might do another webinar after Eid, maybe in Arabic sections, in Arabic language, in order to cover more topics.
Thanks, Ahmed. Okay, thank you all very much. It's been a pleasure, and look forward to speaking to you again. Goodbye.
Thank you very much.
Thank you.
Bye-bye.